Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello, and welcome to the Zach's Friday Finish Line. I'm Ryan McQueeney, a content writer here at Zach's, along with one of our editors, Maddy Johnson.
Hello, today is Friday, June 16th, and as always, we're here to recap this week's biggest stories from the investment and financial world. But before we jump in, let's mention that, although it was no surprise, we, of course, saw the Fed's latest rate hike hog some of the headlines in the middle of the week. But before we get into that, we have something kind of exciting. Ryan has a toy in front of him.
So big news in the Zach's Investment Research office is now I have a sample pack / sound effects board in front of me during this podcast recording. So occasionally you may hear, and I'll also note feedback is appreciated. If this sounds annoying in your headphones, let us know and we'll stop doing it. But applause. Oh, I hit it twice.
Extra applause.
Extra applause. I'm going to have to get used to it, obviously. And then, like, generic
like sitcom.
Disappointing. Like, oh no. So yeah, we've got some sounds. That'll be, I guess, for when words escape us. And
we just...
Yeah, a sample pack is worth 1,000 words, is the old saying, I think. So, yeah,
but the Fed rate hike.
Fed, yeah, that was news. We are a news show, not a music show. As nearly everyone was anticipating, we should know it was no surprise, as you said. The Federal Reserve approved the second rate hike of the year, raising the benchmark target a quarter point to a range of 1% to 1.25%. The central bank also revealed some new details on how it plans to reduce its $4.5 trillion portfolio of bonds, treasuries, and government debt. That's a big number.
It is. It's not small. Interestingly, the latest sentiment around the market seemed to be leaning towards a more cautious outlook on these hikes. So while the rate hike cycle was originally seen as the ultimate sign that the economy had recovered from the Great Recession, the sluggish rise in inflation has many wondering if these hikes are necessary.
Yeah, I think the latest I saw, or the Fed announced after the meeting, was less than 2%. It's not even going to hit that 2% inflation projection they had previously noted. So interesting that phenomenon is happening. I personally am not good enough at macroeconomics to really explain why, but something that we should certainly continue to monitor in the second half of the year, which is right upon us. But for now,
because it's June 16th.
It is June 16th. But let's get into some other stories for now, including the latest twist in a story we covered last week and one we have been keeping a close eye on for some time. And that was...
Travis out.
Travis out, yes. So on Tuesday, Travis Kalanick. Was that a hashtag? I didn't see it trending. I don't know if that was
I don't know.
Twitter.
I think we should make it a hashtag.
Okay. Maybe have hashtag Travis out
or hashtag
for now.
For now. Yeah, he's technically not out. He's just taking a leave, but it's an indefinite leave. We don't know when he's coming back. He is coming back. He's still CEO at this point.
This is a little PR 101. Things are going crazy in the old public relations department. Just disappear for a while and take a break. We'll say the announcement was made on Tuesday, and of course, we're talking about Travis Kalanick, the chief executive officer of a little company called Uber. You may have heard of it. It's a private company, but making some waves around the markets. So Travis announced that he will be taking a leave, or Mr. Kalanick. Sorry, I'm not a first name basis with him. He announced, I would have to imagine that's what he prefers to be called. But
a mid-2000s bro.
So he announced on Tuesday that he will be taking a leave of absence from the company, as you said. Did not reveal a date in which he would return to his rather controversy-ridden company. This announcement was actually a day after his second-in-command, his right-hand man, Emil Michael, left the company. That's a departure that's for good. Michael's departure was, another in a series of recommendations that was voted on by Uber's board of directors on Sunday. I heard it was a 7-hour board of directors meeting on Sunday.
Yikes.
Working on Sunday for that nice board paycheck. These suggestions were actually drafted by former U.S. Attorney General Eric Holder, and they were all as a result of an investigation into complaints of rampant harassment and misconduct throughout the company. We covered that in more detail last week. Just wanted to point out some things. First, I wanted to highlight what Mr. Kalanick said.
It's a good quote.
In his statement. So for Uber 2.0 to succeed, there is nothing more important than dedicating my time to building out the leadership team. But if we are going to work on Uber 2.0, I also need to work on Travis 2.0 to become the leader that this company needs and that you deserve. End quote. Interesting. Travis 2.0. I don't know when I'm going to start with Ryan 2.0. And I also, before we get too hard on Mr. Kalanick, I will also have to say that his mother recently passed away in a car accident. It was a tragic, not expected death at all. And I know that he cited that as being part of the reason for his leave of absence. I would have to imagine that the investigation and the kind of PR headaches were also a contributing factor.
Yes.
Travis 2.0, kind of funny nonetheless.
Yes. But just a quick reminder, this investigation stemmed from a pretty scathing blog post this past February from a former, I think, software engineer. I think her name was Susan Fowler. Just the accounts of rampant sexual harassment at this company
was shocking.
Just shocking. It was unbelievable. But then again, really not unbelievable at the same time when you think about, I guess, the bro culture in Silicon Valley, and not just sexual harassment, but just the, I guess, day-to-day adversities that women face in these big tech corporations. So it's good that Uber as a company and as a corporation is taking steps to fix the blatant problems that it has in its upper management. But it has a long road ahead of it. And it also fired, I think, as we said last week,
20
employees throughout the company because of the sexual harassment scandal.
Yeah, and kind of almost exactly the proof of the exact point that you were making there, but almost on a lesser level, literally at the board meeting on Sunday, there was leaked audio, a good amount of minutes of leaked audio from the meeting, and one of the members of the board of directors was then basically asked to resign on Monday or Tuesday because of just blatantly sexist comment that he made to Ariana Huffington, who is also on the Uber board of directors. And it's just like, come on. We're very clear about what the problem is and what you need to be doing better. And in your board of directors meeting where you're addressing that problem, you have a member of the board just blatantly disrespecting not only a member of the board, but one of the most successful businesswomen in the world.
Yeah.
So it's every little rock you uncover with Uber these days, it's just this is why I use Lyft.
Right. Man.
So, all right, we could ramble about Uber for longer than that.
But that's the latest update with this company. There's sure to be more next week and the week after and the week after. But
we're gonna move over to some publicly traded companies now. One that is a leader in its industry and one of the most iconic brands out there. Mm-hmm. Some news this week from Nike.
Yeah, so shares of Nike, they slumped over 3% on Thursday after Nike announced extensive business changes. So most notably, the company said it would be cutting 2% of its global workforce, which kind of I'm see you reaching for the soundboard. I'm sorry. It accounts for about 1,400 employees.
It's not good.
It's not good.
It's 100% my fault, by the way, because for the first time in 3 years, I got new sneakers over the weekend and they weren't Nike. So it's my fault. I'm sorry. I'm the cause of all of the issues.
Well, which ones did you
Nike
choose?
Global.
Adidas?
No, I didn't. I actually got really cheap Target brand shoes. Shout out TGT.
TGT, nice. The last sneaker brand I bought, I think, were Vans. I don't even know who owns Vans.
Yeah, well, this is
probably why.
Here's the problem. Yeah, 1,400 employees. Yeah.
All right. Anyways, the retailer also introduced a new business structure called Consumer Direct Defense. Sounds kind of aggressive.
Yeah.
Which it hopes will help it better serve its customers. So,
Wait, hold on a second. Could it possibly be consumer direct offense?
offense,
Like,
offense,
like, cause
offense,
like more like a sports thing.
offense, offense. I mean, yeah,
I think maybe they were doing a sports reference
offense,
there, which still
consumer
doesn't
direct offense.
like they're going on offense now.
Yeah, you're probably right.
Sports.
I really read it as offense, and I didn't.
Direct
even think-
offense is like more of like a military tactic.
Direct
Yeah.
offense. You know,
Either way.
either way, Nike will focus on consumers in 12 cities and across 10 countries, like New York, Tokyo, Berlin, and Mexico City, just to name a few. These locations will represent 80% of the company's projected growth through 2020. Mike Parker, the chairman, president, and CEO, said, quote, "The future of sport will be decided by the company that obsesses the needs of the evolving consumer. Through the consumer direct offense, we're getting even more aggressive in the digital marketplace, targeting key markets and delivering product faster than ever," end quote. Nike also said that it's trying to improve efficiency throughout its geographic structure and will change from 6 to 4 reporting segments, cutting 25% of its styles, slashing product creation styles in half, and upping its direct-to-consumer game with the combination of Nike.com and Nike Plus.
Lots of changes there.
Lots of changes to the company.
Interesting. It's been kind of a rough patch for a lot of our apparelers out there, especially in the sports segment. Nike recently stopped making golf equipment. I think Adidas just sold its golf brand. Under Armour's, obviously, their struggles have been widely documented. So interesting.
Yeah.
Interesting. And hopefully the restructuring is what Nike needs because, as I said, one of those iconic brands, and you hate to see something as important as the Nike swoosh having a rough go of it.
Yeah, but I mean, they're still the biggest sneaker maker in the world, and I think
Be all right.
I think they'll be all right.
Okay. Good. All right. Speaking of some people that we hope are going to be all right, it was a crazy week. Let me emphasize crazy week for tech stocks. This actually started kind of late Friday afternoon last week. So after last week's show, but kind of not necessarily this week. It's been going on for a while now. Crazy volatility all over the tech sector. I think it really started with a note that Goldman Sachs issued on Friday last week, kind of warning about these unaccounted for dangers in tech. Almost immediately afterwards, a massive industry-wide sell-off. And this is a sector, if we will remember, that has been one of the hottest so far this year. But I guess, might be a sign that things are changing. I don't want to jump the gun on this because of the gains have significantly outweighed this week's losses. But so let me get back to this Goldman report. Goldman, part of the report, first of all, was claiming that the FANG acronym, everyone's favorite FANG acronym, is now obsolete. The firm opted to rename the group of companies FAMG.
FAMG. No, you have to FAMG.
Oh, because it's two A's.
Two A's.
FAMG. Okay, so it's Facebook, Amazon, Apple, Microsoft, and Alphabet, which is actually FAMA, but it's Google. So FAMG. These acronyms are getting a little bit ridiculous, but whatever. To each their own. Goldman Sachs, whatever you want to do. The financial giant, though, thinks that the huge focus on this particular acronym might cause problems. Kind of what this was boiling down to was that Goldman thinks risks such as regulatory concerns and cyclical exposure will actually cause these tech stocks to become far less safe than many investors are assuming. And so kind of a good way to think about this is the tech sector inherently has certain risks attached to it, things that Goldman pointed out and more, things that make tech volatile. Since the beginning of the year, all of these tech stocks were doing so well. A ton of passive investors came to tech stocks, investors that are trying to avoid volatility. And when that happens, they put a lot of blind trust in the fact that tech is just no longer volatile, even though it is inherently volatile. And then so at the first sign of something bad happening, they pull out, they sell, and that kind of exacerbates the downward trend and makes things even worse. So Goldman was like, hey, like maybe like chill out. And basically all hell broke loose and tech stocks were down across the board on Friday. I wanted to note as well that Apple in particular has had a really bad week. And just because I really want to press my button again, shares of Apple since last Thursday's close through Thursday of this week's close, down more than 7% in 1 week. Not a good week for Apple. On the back of another ratings downgrade, the second in 2 weeks. Continued caution from analysts saying that have priced in the iPhone 8 already and that we need to chill out on it. And so, yeah, I wanted to highlight this quick quote from Mizuho analyst Abhi Lamba. Excuse me if I got the name wrong. He said, quote, "We believe enthusiasm around the upcoming product cycle is fully captured at current levels with limited upside to estimates from here on out," end quote. So, yeah.
There's a lot of truth tea happening this week for tech stocks.
Yeah.
Yikes.
So,
well, my question is, so no N.
Okay.
N's out of the acronym.
Yeah, no Netflix.
No Netflix, but NVIDIA?
Yeah, no NVIDIA either. Some people's preferred N in
Preferred N.
NVIDIA had its own batch of problems over the past week or so, kind of more along the lines of specific analyst notes there. So it certainly wasn't a good week for NVIDIA either. But the likes of Apple, Amazon, Microsoft, Alphabet, Facebook, all slumping at least marginally this week, which is a story just because of how rare that is.
Yeah, I did see
year.
Amazon stock on Thursday was down to $955 a share.
Down below the quadruple digits again.
Yeah, it'll get back there.
Well, what a bummer. Okay, but wait, hold on a second. Amazon was down to $995 a share. Was that what you said?
$995. Yes, okay. Not $955. Excuse me.
That's sad.
Yeah, $5. Sorry, my mind's a mess this week.
So, as we mentioned earlier, it is July 16th. Or June 16th, sorry. It is going to be July soon, and that means we're almost halfway done with the year. Even with these losses, tech stocks are going to come out as one of our better performing sectors in the first half of the year, unless the last 2 weeks of June are really bad. So what is going on, and what should we expect from the second half of the year? Are you thinking this is a minor setback for a great comeback, or is maybe a second half of the year plateau ahead?
I don't know. We had like that news story that broke earlier this week about the Apple iPhone 8 rumor that was allegedly reportedly to be true about the waterproof.
Anonymous sources. Leaks.
But
it was a supplier said it. Meeting.
So the new phone is supposed to be waterproof. It's supposed to have wireless charging. So
wireless charging, maybe even at a distance.
Whoa. So it just seems like, at least for Apple, as an example, it just seems that for investor excitement to be dwindling at this point, I don't really buy it.
Yeah.
I don't know, especially as we head into the second half of the year and with this iPhone 8 like about to debut. I feel like all of this is just kind of clouding.
Yeah. It'll be interesting to see how quickly everyone forgets about this minor downtrend as soon as the iPhone 8 reveal blows it out of the water and it's amazing. Of course, I think what the analysts here, the kind of analysts that have been the catalyst for Apple's recent slump, have been saying is Apple has been trading as if the iPhone 8 is going to be the best phone in the history of phones for sure. And it very well could be. But even if it is, it might already be priced in And
I think
if
that's
it isn't, then that could, as we mentioned before, exacerbate the downside volatility because we're like, Samsung's cooler still. I don't know, which I will say, the iPhone 8 is going to be waterproof. The Galaxy phones have been water resistant for the last 2 generations. So looking at you, iPhone.
You just sounded like Richard from Silicon Valley.
Did I?
You did.
Well,
Trying to make a point.
I'm a proud Samsung Galaxy owner, so I have my biases there for sure. I will say though, for those who think we're making much ado about nothing, is that the Shakespeare?
It is.
Okay. So that I understand, like I get it. It's probably not that big of a deal, this recent 1 week slump. But like I said, with how impeccable the tech sector has been all year, a surprising downturn this week.
Yeah. And I feel like, Facebook stock hasn't let us down quarter after quarter after quarter after quarter. Amazon is, I think, definitely more volatile out of the few here, out of FAMG. Just looking at its earnings history. But in the same with
the most inconsistent.
The most inconsistent, yeah. And with Microsoft, they have their cloud, but I'm honestly surprised they included Microsoft in there, to be honest.
Yeah, honestly, I would have to dig into that specific note again because I haven't read it in full since last Friday.
Their Azure cloud platform is growing rapidly and crazily fast. So they have that going for them. And their new Surface laptop, that's definitely should be touted as one of their flagship computers for sure. And Alphabet is Alphabet. Google is Google. So it's just, maybe it is just much ado about nothing.
Much ado about nothing. Maybe that's what we'll title the episode. But I think on that, on the Shakespeare reference, that's about it for this week. Thank you, as always, for joining us. Please, especially with the soundboard, feedback appreciated. If you definitely don't want to see the soundboard again, or if you would like us to cover a specific story, if you think we got something wrong, we want to hear from you. Feel free to email us at podcast@zax.com. And you can check out all of our other exclusive audio content at zax.com/podcasts. Feel free to subscribe, leave us a rating on Apple Podcasts, especially if you enjoyed the show. And thank you for joining us, and we will see you next week.